So guys, the new month is officially upon us, which means that it's time for another dividend portfolio update. And I've got to say, guys, we saw a pretty decent pullback this last month. And in this video, I'm going to show you everything, like my best and worst performing stocks for the month, all of my recent moves in the portfolio, and we'll discuss what my upcoming plans are here in April. But before we get to that, guys, I want to hear from you. Leave me a comment below and let me know what's been going on in your portfolio this last month. Were you up? Were you down? Did you hit any crazy milestones in your portfolio? I want to hear all about it in the comments below. Anyway, guys, getting into how my portfolio performed over here using my dividend portfolio tracking spreadsheet, which you can start using for free. There is a link to download this spreadsheet in the description of the video. But anyway, guys, what we're looking at here is just my main taxable brokerage account. And as we can see, it is currently valued at just under $76,000. And every single year, this account is bringing in $2,867 of dividend income. But going back to the account's current value here for just a moment, this number, guys, is like a $3,200 decline compared to this time last month, which pretty much erased all of the gains we saw from the month prior back in February. So like I said, we saw a pretty substantial pullback. And if we look at the breakdown for the month over here on Snowball Analytics, which outside of my free portfolio tracker, guys, this is hands down my favorite portfolio tracker. If you're looking for something with more bells and whistles than your standard spreadsheet, then I highly recommend you give Snowball Analytics a try. And the cool thing is you can actually use it for free. In the description and in the pinned comment, there's a link to try out Snowball Analytics with a 14-day free trial. So like I said, I highly recommend you check it out. I think you guys would really like this platform. But anyway, guys, as we can see here, this month's decline was the biggest drop that my portfolio has seen really over the last 12 months. I mean, we came pretty close back in December where we were down 4.5%, and last April we were down 4%, but March 2025 definitely took the cake, down 4.7%. And if we look at the breakdown of these losses, we can see that I have lost almost $4,000 just in share price returns. But we did make a little bit of that back with dividend income. In total for this month, just here on my taxable account, I brought in about $227 of dividends. So that's not a bad month. And if we scroll up just a little bit, guys, and compare my portfolio's returns to those of the S&P 500, to the NASDAQ, and to SCHD, in the last month, it looks like my portfolio beat the S&P 500 by almost 2%. I was still in the red as we saw, but the S&P saw a bigger drawdown than I did. The same with the NASDAQ. Looks like I beat the NASDAQ by about 3.3%, but SCHD took the cake this month, guys. It outperformed me by about 1.25%, so that's pretty solid. And if we zoom out looking at the year-to-date performance, things are still looking pretty rosy. Looking at the chart, I'm outperforming everything here in 2025. And compared to the S&P, from the start of the year until now, I'm beating it by 9.3%. Looks like I'm beating the NASDAQ by 13.3% and am outperforming SCHD by 3.1%. So that all looks really good. And then if we zoom out once more over the last year, guys, same thing is true here. We're outperforming everything, beating the S&P by about 6.5%, the NASDAQ by 7.7%, and just whopping SCHD by 8.4%. And if we look at the chart here, we can see that my portfolio has shown a lot more resilience this year than pretty much everything else. I mean, SCHD is holding in there pretty well, but we're definitely showing some more resilience compared to the S&P and the NASDAQ, which is pretty much the only reason for this outperformance. With that said, though, despite this resilience, March definitely could have been a better month. And as I'm sure you can imagine, I had a couple stocks at least see some pretty big drawdowns, which is what we're going to take a look at next. All right, guys, now getting into my best and worst performing stocks for the month, we're actually going to start with my top performers. Really, the only one that saw any notable performance this last month was Clear Secure, who was up about 8% just in the last 30 days. And the share price went from about $23.50 all the way to a peak of about $27, almost $28 here. But we can see that today it's seen quite the pullback. It's down 4.2% just today and is hovering at around $26 per share, which is where it seemed to have settled out, somewhere between 26, 27.5 or so. But slowly but surely, it's making its way back up there. And if we look at the year-to-date performance so far, Clear is still in the red. It's down 3.36%. And jumping over, taking a quick look at my Clear position, guys, I've been buying a lot of this stock lately, as we'll see later on in the video. But at this point in time, I have 128 shares at an average cost of $28.91, which is a lot better than where my average cost was. It really wasn't that long ago that my average cost per share with this position was like $32, $33. So buying the dip on this one has been pretty good so far, and it's definitely narrowed the gap between my cost basis and the current share price. And with that, guys, just looking at the share price returns, this is going to leave me down about 8.8% with ClearSecure, which is a lot better than where it was. I used to be down over 21, 22%, so we're heading in the right direction. But anyway, like I said, that was really the only one in my portfolio that saw any notable gain in this last month. Now, on the other hand, in terms of poor performing stocks, by and large, Williams-Sonoma was my biggest loser this last month. The stock was down 17.4% just in the last 30 days, and it's down another 3.6% just today. And there really isn't anything wrong with this company to warrant such a crazy drop. I mean, prior to this, it's seen a very substantial run up, so it was probably due for a pullback. And just with all the volatility and uncertainty in the market right now, I think more than anything, that's what's pushing the share price down. It's really nothing to be concerned about. And in fact, Williams-Sonoma just recently put out some very solid quarterly earnings. But anyway, with this drop in the last month, guys, that's going to bring the year-to-date performance to minus 17.4%. Really not too different than what we saw here in the last month. And the share price has taken quite the hit, guys. It's gone from almost $220 per share to where it's at now, just under $160 per share. But fortunately, I had such a large margin of safety with this stock that even with that pretty big drop, I'm still up about 140% on my position. Not as nice as it was. I think at one point I was up about 210%. So it's definitely seen a pullback, but nonetheless, we're still sitting pretty, guys. 36 shares at an average cost of $66.54. I really can't complain too much. And at the end of the day, I still think this is a great business and I'm happy to hold on to it. And then, guys, my other poor performer this last month was my beloved Starbucks, who was down about 16% in the last 30 days. And we can see the share price really took a hit, going from about $116 per share to now $97.61 at the time of recording. And it's down another 1.3% just today. So either way, a really big drop for Starbucks, which is going to leave them still up in the green, actually, year to date. They're still up 5.4%, which is very surprising. But this last month, they definitely took a hit. And with that said, taking a look at my Starbucks position, I have just over 78 shares at an average cost that is still pretty good, $86.34. So I'm still seeing, a pretty decent gain. I'm still up 13% with this position. Nothing too crazy. And kind of like with Williams-Sonoma, I'm still very happy to own Starbucks. And now with this pullback, actually, that's pushed Visa into the #1 spot in my portfolio. So I'm very happy to see that. That was my goal with this one all along. So overall, guys, we took a couple hits this last month, but it is all good. Nothing really crazy. We're still holding strong. And if nothing else, it's just creating some good buying opportunities, which is what I want to talk to you about next. We're going to get into all of my purchases for this last month. So guys, it was a pretty straightforward month of buying for me. In the taxable account, I only added to 2 positions, the first of which is Realty Income. And in fact, I only picked up these 2.65 shares of Realty Income earlier this morning, right before I recorded this video. And I bought those shares at $56.52. And then throughout the rest of the month, I was just dollar cost averaging into ClearSecure, like I told you just a moment ago. And in total for the month, I picked up 22 shares at an average cost of $25.69. Not a bad price. The current share price is just a little bit above that right now, so feel good about those buys. And then over in the Roth IRA, I made my normal contributions to SCHD and VOO, and it looks like for the month of March, most of my Roth IRA contributions went to VOO because I only picked up 4.6 shares of SCHD and I ended up picking up 3/4 of a share of VOO. So like I said, overall, a very straightforward month of buying for me, and I would anticipate that April is going to be more of the same. I don't know if I'll add much more to ClearSecure, maybe a little bit more, but I'd like to throw some more money into Realty Income while it's not too far off from my average cost per share. I might do the same thing with Johnson & Johnson because it's pretty close to my average cost as well. We'll see what happens, but in my portfolio, there really aren't that many stocks that I'm interested in adding to right now. Everything's looking decently frothy. And with that, guys, now moving on and taking a closer look at my Roth IRA. At this point in time, we can see it is valued at $16,215, and it's down a couple $100 compared to this time last month. Really nothing too crazy. And if we look at the returns from March, we can see a similar performance as what was going on in the taxable account. In fact, it saw just slightly less of a drawdown. It was only down 4.56% compared to the taxable's 4.7%. So some slight outperformance there. And if we zoom out looking at the year to date, it looks like the Roth is down in the red. It's down 1.6%, and over the last year, it's still up a little bit. It's still up 9.1% here. But anyway, guys, if we take my main taxable brokerage account valued at just under $76,000, and this account's bringing in $2,867 of income, and add that to my Roth IRA valued at $16,215, and this account is bringing in $454 per year, that's going to bring my combined portfolio value to $92,212. My annual dividend income saw a big boost. This is sitting at $3,321, which, as we can see, is about $120 compared to this time last month. So we added a lot of income in the last 30 days, and so far here in 2025, we've added $257 to the projected annual income reading. We started the year out at $3,064, so we're definitely making some great strides. And I think there were a couple of things that were responsible for this big jump in income this last month, guys. I mean, first and foremost, besides my purchases, which obviously would increase the projected annual income amount, I think my spreadsheet also updated its data from FinViz, which is the spreadsheet's data provider for this particular column that pulls all of the annual dividend info. But I think that refresh definitely had an impact on the annual dividend income reading. And in addition to that, I also saw a couple of really solid dividend increases. Williams-Sonoma boosted their dividend by about 16% this last month, which is pretty crazy. They did that after reporting their quarterly earnings. And SCHD's most recent payment was over 22% higher than this time last year. I think the spreadsheet extrapolated that one quarterly payment for the whole year, which also contributed to the increase. Anyway, if you put all these factors together, I think that's why we saw such a big jump in income this month. And I wouldn't expect the same thing to happen next month at all. I wouldn't expect it to be nearly as aggressive, but still, I'll take whatever progress I can get. Now guys, as far as my watch list goes, I didn't make any crazy changes to this list in the last month. No new additions, I didn't take anything off the watch list. What I did do though is move my watch list over from Seeking Alpha to Snapstock here, and this is a new feature we just rolled out. Still in its first version, we'll be making more improvements to it over time, but this is what it looks like so far. You can see you've got the ticker symbol and company name, you've got the current share price, you've also got the target share price and the distance from the target share price right here. And if we scroll down, just scanning all of these distances from target, it really doesn't look like anything is that close to being within buying range, except for maybe Pool Corporation right here, which is only about 7.66% away from my target share price of $295. I'll tell you what though, even at current prices, I still think Pool Corporation is looking like a pretty decent buying opportunity. And that's something I'm telling you more about in this next video right over here. In addition to Pool Corporation, I'm also telling you about two other stocks that also look very deeply discounted. All three of these stocks look like great buys right now in April. So click right over here to learn about those, and I'll see you in the next one.